Right now, Plug Power, ticker PLUG, is trading live at $2.48 per share. That is a nasty, painful fall. The stock is down $0.17, which is a 6.23% collapse in live intraday trading on this November 10, 2025. And let's be perfectly, brutally honest. That $2.48 price and that 6.23% intraday crash is not a dip. It is a verdict. The expectation, the one that has been sold to so many people doing self-investing, is that today is just an earnings day. We are all supposed to be waiting patiently for Plug Power's third quarter earnings report, which is scheduled to drop after the market closes today at 4:30 p.m. Eastern. The expectation is that we will listen to the call and find out how the business is doing. The reality is that the market is not waiting. This 6.23% plunge is not anticipation, it's a stampede for the exits. It is a sign of raw, crippling fear from investors who are desperately trying to get out before that report hits. They aren't betting on a good report, they are betting on a disaster, and they are pricing it in right now. This isn't just another earnings report. For Plug Power, this is an existential level event. The entire conflict, the whole story, is no longer about the dream of a green hydrogen future. The story is about survival. The market is terrified that when that report comes out in just a few hours, it will contain the two most dreaded words in finance: going concern. This is the reality that is crushing the expectation. Investors are not asking, will they beat on revenue? They are asking, will they be in business next year? Let's rewind and establish the common ground, the grand narrative that was. The general belief, the story that got this stock on every top 10 list and made it a darling on the Robinhood app and SoFi Invest, was that Plug Power was the one. It was the Tesla stock of the hydrogen economy. It wasn't just a company, it was the company, the first mover that was going to decarbonize the world. The story was beautiful. They started by dominating a niche, building hydrogen fuel cells for forklift fleets in warehouses for giants like Amazon and Walmart. It was a proven, tangible business. But that was just step one. The real story, the one that sent the stock to the moon, was vertical integration. They weren't just going to use hydrogen, they were going to make it. They were going to build the electrolyzers that create green hydrogen, build the gigantic production plants to liquefy it, and build the distribution network to deliver it. They were going to own the entire ecosystem, from molecule to forklift. This was the expectation. A high-growth, vertically integrated energy tech company. It was supposed to be the NVIDIA stock of a new industrial revolution, providing the essential hardware for a new world. And then the reality. The reality is that this ambitious, world-changing dream has been a financial nightmare, an almost unbelievable black hole for cash. The reality is that for years, Plug Power has been one of the most successful companies in the world at one thing: destroying capital. Vertical integration, it turns out, is astronomically expensive. Building these massive, first-of-their-kind hydrogen plants has been plagued by delays and massive cost overruns. And here is the core, fatal problem. The cost for them to produce this new green hydrogen has consistently been higher than the price they could sell it for. They have been losing money on every single kilogram they produced, all the while spending billions to build the factories to make it. This is why today's 6.23% drop is happening. The market is looking at the math from the first half of the year, and it is terrifying. In the first quarter of 2025, Plug Power posted a gross margin loss of negative 55%. They burned through $152.1 million in cash from operations and investing. They ended that quarter with only $295.8 million in unrestricted cash. Let's do that math again. They had less than $300 million in the bank, and they were burning $150 million per quarter. The math does not work. This is the definition of an unsustainable business model. This is the kind of balance sheet that keeps professional investors on Interactive Brokers up at night. And it's the kind of detail that many new investors doing online investing might miss. They see the green story, but they miss the deep red of the cash flow statement. So, as we approach the 4:30 p.m. call, the official analyst expectation is for a loss of about $0.13 per share on $170 million in revenue. But frankly, who cares? Nobody's selling the stock down 6% today because they're worried about a penny miss on EPS. They're selling because they're looking at that $295.8 million cash balance from Q1 and the $819 million in negative free cash flow over the last 12 months, and they are convinced that the company is about to announce that it is functionally broke. The ghost in the room is the going concern warning that Plug Power had to issue in the past. The market is pricing in a sequel. They are afraid that management will be forced by their auditors to include language in their filing stating there is substantial doubt about the company's ability to continue as a viable business for the next 12 months. If that language drops, this $2.48 stock becomes a $1 stock overnight. This is why institutions that hold this in a Fidelity brokerage account or a Fidelity mutual fund are not taking that risk. They are selling first and asking questions later. This isn't Fidelity Wealth Management. This is a speculative gamble. This is the kind of asset that a Schwab Intelligent Portfolios robo-advisor would never, ever touch. This entire day now is a binary bet, and the 4:30 p.m. call is the coin flip. The future of this company and the value of its stock rests on two completely opposite outcomes. The bull case, the one that the few remaining optimists are clinging to, is that this report will be a kitchen sink moment. This is the hope. The bulls hope that Project Quantum Leap, the company's cost-saving plan, has finally worked. They are praying to hear that the cash burn has been dramatically reduced. They are hoping to hear that the new Georgia and Texas hydrogen plants are finally operating at full capacity and, most importantly, at a profit. And the biggest hope of all, the white whale, is the Department of Energy. The bulls are desperate for any update on the $1.5 billion loan guarantee that Plug Power has applied for. If management even hints that the DOE loan is approved, the stock will explode higher as it provides the liquidity lifeline they so desperately need. But the bear case? That is what is happening right now. The bear case is what the 6.23% drop is screaming. The bear case is that the call at 4:30 p.m. will confirm everyone's worst fears. The cash burn is not under control. The new plants are still losing money. Project Quantum Leap was a failure, and the cash balance is now at a critical sub-$100 million level. And in this scenario, management will have no choice. They will have to admit that they do not have the capital to fund their operations for the next year. They will have to issue the going concern warning. At that point, the stock's only hope is a massively dilutive equity raise, printing billions of new shares at $2 per share, or an outright bailout. The $2.48 price will look like a distant, happy memory. This is a defining moment for a company that was once the poster child for the new energy economy. I have to know what you think. This is the real question for today. Comment below with your prediction for the 4:30 p.m. call. Does Plug Power finally get the cash burn under control, or do they issue another going concern warning? In summary, this is as high stakes as it gets. Plug Power is trading at $2.48, and it's plunging because the market's expectation has fully collapsed. The grand futuristic story of a green hydrogen pioneer has collided with the brutal, simple reality of an empty bank account. The company is on a cliff, and in a few hours, we will find out if they have a parachute or if we are about to watch them fall. Disclaimer, This content is for informational purposes only. It's not financial advice, so don't make any decisions without doing your own research or consulting a professional. If you found this helpful, don't forget to like, comment, and share. Stay smart with your money.